How to increase your cash flow with payroll funding. Payroll funding can be an invaluable tool for small businesses and staffing agencies to improve cash flow. As a seasoned business loan broker, I've seen firsthand how payroll funding allows companies to better manage expenses and access working capital when they need it most. In this video, I'll explain what payroll funding is, who can benefit from it, and how to choose the right payroll funding company for your needs. What is payroll funding? Payroll funding, also known as payroll financing, is a form of business financing where a company receives an advance on future payroll from a specialty finance company. The payroll funder provides money upfront to cover payroll costs, and the business repays that money over an agreed timeframe, often aligned with their payroll cycle. Here's a simple example. A staffing agency has $100,000 in upcoming payroll expenses due every 2 weeks. They partner with a payroll funder who advances them 90% of that amount, or $90,000. The staffing agency processes payroll as normal and repays the funder over the next few pay cycles. This infusion of capital can be used to meet immediate payroll needs or other business expenses. Payroll funding helps bridge the gap between when you have to pay employees and when you get paid by clients. I've structured payroll funding deals ranging from $50,000 to over $5 million. It's a scalable solution that can provide access to significant working capital. Who should use payroll funding? Payroll funding is ideal for companies with recurring payroll costs, fluctuating cash flow, and invoices with longer payment terms. Some examples include staffing agencies. Staffing companies have to make weekly or bi-weekly payroll but don't get paid by their clients for 30-90 days. Payroll funding helps manage this timing difference. Healthcare facilities. Medical practices and home health agencies have high payroll costs and patient reimbursements that come in slowly. Payroll funding gives them flexibility. Government contractors. Contractors working on long-term government projects often face payment delays. Payroll funding allows them to pay employees consistently. Seasonal businesses. Companies in industries like tourism and agriculture see revenues rise and fall throughout the year. Payroll funding provides working capital during slow periods. Startups. Early-stage companies often operate at a loss as they build their business. Payroll funding helps cover payroll until revenue catches up. As you can see, payroll funding is versatile enough to serve companies in many different industries with irregular cash flows. Benefits of payroll funding. There are many advantages to using payroll funding strategically as part of your overall financial plan. Improved cash flow. The most obvious benefit is having cash on hand to pay employees and cover other operating expenses. This stabilizes cash flow. Access to capital. Payroll funding provides working capital without diluting ownership like equity financing. Funders can approve deals much faster than banks too. Reduced risk. Payroll funding ensures you can make payroll on time, avoiding painful employee turnover or regulatory fines for late payments. Increased flexibility. You can adjust your payroll funding amount up or down each pay period depending on your needs that month. Enhanced growth. The working capital from payroll funding can be used to invest in initiatives like new hires, equipment, or marketing. Better supplier terms. With consistent cash flow, you can negotiate better deals with vendors by paying invoices early or in bulk. Payroll funding checks off many boxes: fast funding, flexible terms, and relatively low cost compared to high-interest business loans. What to look for in a payroll funder? Choosing the right payroll funding partner is critical. As an experienced business finance advisor, I recommend looking for these key attributes. Industry experience. Look for funders with extensive experience in your specific industry. This ensures they understand your business model and challenges. Quick funding. The funding process should take days or weeks, not months. Delayed payroll funding defeats the purpose. Responsive service. Your funder should be easy to reach and provide support when you need it. Lack of communication is a red flag. Flexible terms. Look for a company that will tailor the advance percentage, payback period, and other terms to your needs. Clear fees. Reputable funders are upfront about their fees. Be wary of those who hide fees in the fine print. Positive reviews. Check third-party review sites to evaluate customer satisfaction levels and spot any complaints. The best payroll funders operate with transparency and want a mutually beneficial long-term relationship. Don't sacrifice customer service to save 1% on fees. Pitfalls to avoid with payroll funding. While payroll funding can supercharge your business growth, there are a few potential pitfalls to be aware of. Don't use it as a band-aid for deeper problems. Payroll funding treats the symptom, not the cause, of cash flow issues. Avoid funders who aggressively push for longer terms or higher advances than you're comfortable with. This leads to a debt spiral. Monitor client payment schedules closely. If their payments start lagging, you'll need to work with the funder to adjust payback timing. Don't keep payroll funding in place indefinitely. Reevaluate the need monthly and scale back as business conditions improve. Watch out for funders who nickel and dime you with an array of fees. This quickly erodes the savings. With some caution and discipline, these risks can be managed. Be conservative with payroll funding amounts and terms at first while you learn the ropes. Payroll funding case study. Here's an example from my own client files that shows how impactful payroll funding can be. ABC Staffing was struggling with $1 million in payroll costs due every 2 weeks. However, clients were paying invoices on 60-90-day terms. This $2 million working capital crunch limited their ability to grow. I matched ABC Staffing with an experienced payroll funder who advanced them 90% of each payroll, or $900,000 every 2 weeks. ABC repaid that on their normal client payment schedule. The benefits were immense. Immediate access to $1.8 million in working capital. Payroll now handled seamlessly despite lagging client payments. Hired 10 additional recruiters to staff more positions. Expanded into 3 new geographic territories. Grew top-line revenue 28% year-over-year. This case study demonstrates how strategic payroll funding aligned with client payment cycles can transform a cash-starved business. Key takeaways on payroll funding. Payroll funding provides fast access to working capital that can be a game-changer for companies with high payroll costs and slow receivables turnover. Here are the key tips to remember. Payroll funding advances capital to cover near-term payroll. Ideal for staffing agencies, contractors, healthcare, and more. Improves cash flow, reduces risk, provides flexibility. Find an experienced funder tailored to your industry. Start conservatively and scale up payroll funding amounts. Monitor client payment cycles closely to match repayment. Use it strategically, not as a long-term band-aid. As a seasoned small business finance advisor, I'm convinced that payroll funding can be an invaluable tool for businesses struggling with cash flow gaps. I encourage you to evaluate whether it aligns with your growth goals. Have any other questions about how payroll funding works or how to choose a provider? I'm always happy to offer my insights from over 10 years in the industry. Feel free to reach out anytime. Call 888-653-0124 today or click the link in the description to learn more and share your success story.